The surge in the broader market was led by large-cap stocks, as investors preferred the relative safety of blue chips to mid and small caps. To some extent, it's defensive buying at a time of global macroeconomic turbulence. It's also unusual, a trend reversal of sorts. Historically, small and mid caps tend to outperform when the Sensex and the Nifty rally. The Indian stock market may have been buoyant over the past month, but there is still an element of nervousness. Let us probe the reasons why bulls are remaining cautious despite the market's recent rally. While the BSE Large Cap Index gained 7% between 3rd October and 3rd November, the BSE Mid Cap and BSE Small Cap have lagged, gaining 4.4% and 2.4% respectively. Meanwhile, global indices such as Dow Jones, DAX, KOSPI and Nikkei have gained far more. It signals a fragile recovery in India, and the bulls may be biding their time. India remains an outlier of sorts in the global economy. In its World Economic Outlook, the IMF lowered India's growth projections for 2022 by 0.6 percentage points to 6.8%, but it will still be the second fastest growing major economy in the world. And in 2023, it's projected to be the fastest growing, expanding at 6.1%. Krishna Srinivasan, IMF's Director of Asia and Pacific Department, told PTI in an interview almost every country is slowing. In that context, India is doing better and is in a relatively bright spot compared to other countries in the region. At the moment, the IMF seems to be suggesting a relatively soft landing for the US economy. It's expected to clock 2.4% growth in 2022 and 1.1% in 2023. The Fed opted for a fourth straight 75 basis point hike amid stubbornly strong inflation and jobs data. The global economy will see turbulence over the next year or so. IMF says the worst is yet to come, and for many people, 2023 will feel like a recession. It's still far from clear how long central banks will continue to tighten monetary policy, with inflation remaining elevated in many pockets of the world. The RBI has hiked repo rates 4 times since April, but inflation was way above its comfort zone at 7.4% in September. An erratic monsoon has put pressure on food prices, and more rate hikes are likely, though they are likely to be more calibrated. Over-tightening is more likely when central banks act in an uncoordinated fashion, warns the IMF report. Meanwhile, a weak rupee will put pressure on energy costs, though a recessionary global environment will cool commodity prices.